This video is about the changes which are coming into force about research and development, tax credits and tax benefits, and also I want to talk about probably the bigger effect, which is the change in the way the revenue are policing the system. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel, and if you press the like button, it just helps me in the channel, so please do that, thank you. Research and development. So they changed the rules with effect from the 1st of April 2023. Well, why am I talking about it now? It's over a year ago. Well, of course, we then do a whole year, and then we do the year end, and then the changes have their effect. So that's why I'm talking about it now, because the changes that were actually implemented some time ago are now having their effect. So what are these changes? Well, there's two ways in which people benefited from research and development. First of all, they got an enhanced cost, could write off more than the expenditure against their profits, and therefore they had smaller taxable profits, and they paid less tax. And their tax bill was reduced by something like a quarter of the R&D. So if you spent £10,000 on R&D, your tax bill would be reduced by something like £2,500. That was in the past. The rules have been tightened, so that is now more like 21%, so it's just gone down a bit, although it's a little bit more complicated now because of course there are 2 or 3, depending on how you define it, rates of corporation tax, so it's a little bit more nuanced. The other way in which you could benefit from research and development, you've got loss making, you could actually claim some of the money, the research and development money that you spent, back as a tax credit, even though you didn't pay the tax. So if you spent £100,000 in the past, you could get a third of it back. So you get a cheque from the government for £33,000. A third of it goes back to you. That has been restricted. So now for most companies, that's just over 18%. So it's gone down from 33% to 18%, which is half. It's not far off. So that's a substantial reduction, unless you're a research and development heavy business, so you spend more than 40% of your costs are on research and development, in which case the reduction is, I'll check my notes, down to 27%, so it's not quite as much. But either way you look at it, it is a reduction in the benefit from research and development. And I think what's driving that, and what's actually driving the next bit of the video, is that the revenue think there was some abuse going on within the system. And there are things as well to stop what they consider to be abuse. So now you have to tell them when you've done research and development promptly, whereas in the past you could wait 2 years after the year end, which is almost 3 years since you did the work, and then tell the revenue. Well, they say, come on, you should know when you've done research and development, and you should do it in the right time zone, not years later and then get some money back. They thought that was abuse, which is why they've tightened the rules. They've also made it so that it really should be research and development that's done in the UK. And there were other technical changes as well, but those are the most important ones. What have they actually done to police the system? Well, this I think is as big a change. So back in the day, it was a bit of a wild west for research and development, and people were just claiming almost anything, and the revenue was giving money away without really checking the forms, in my belief. Maybe I'm understating it, but that would be my observation. And I was getting an amount of heat from that because people were saying, oh, we claim this guy can claim that, they've claimed the other. And we even lost clients because we hadn't claimed what other people were able to claim, because we were always, these are the rules and we should adhere to the rules. And I know that we work in a self-assessment system. So self-assessment means you self-assess yourself for tax, and then the revenue may deign to check it. Now the problem from a taxpayer point of view in that system is that the revenue can check it like 4 years retrospectively or more in some cases. So they're checking things very much retrospectively when you've slept, forgotten and spent the money. And I've seen this in other areas. So people were getting loans from the Channel Islands, they were doing weird things with film rights, they were doing weird things with limited liability partnerships and with employee benefit trusts, and there's been a cycle. And basically what seems to happen is that these things sort of start and people think it's okay, and then they balloon and the revenue thinks, well, hey, we're losing a lot of revenue. They then check the tax law, and then if they think they're right on the tax law, then they change it effectively retrospectively. So they go back and say, this is the law, it was always the law, and we're going to go back 4 years or more. And also, if the law isn't correct, they close the loophole. So they're going back and they're checking these R&D claims retrospectively. And this has a number of effects. First of all, we've got to be absolutely careful that we do them correctly, because if we don't do them correctly, the revenue saying, well, your self-assessment, if you're not doing them correctly, is that fraud? Well, obviously, if we've done it, if it's a matter of opinion, then it's not fraud, but they are actually testing some of these old ones against fraud. And I know from both looking at the sort of the accountancy press, I have a sort of an ear to what people on blog sites are saying in accountancy, and also from my insurers and how much interest that my insurers have in the R&D tax work that we've got, that in accountants are getting into trouble about this, and therefore their clients are. So we do need to be careful that we do R&D really carefully, and I think that the sort of the big, there's quite a lot of publicity about people who are claiming all sorts of stuff for R&D, and I think that that has now closed, and I think that closing that and making sure that R&D is only claimed for real R&D is actually, in practical terms, a bigger change than those changes in the tax rates, which means we get less money from research and development. So what to do? I think we've got to be careful with them. Make sure that you have proper justification. Make sure if you've done previous claims that you have all the documentation, you keep the documentation, so that you can rebut any suggestions from the revenue. And then we have these new rates, and we can benefit from them, and R&D remains an important way in which you can save tax. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel, and if you like the video, well, it helps me in the channel, so thank you for that.